everyone and welcome. I'm Oriel Morrison-Higgins and I'm joined today by Linden Sproule, the General Manager of Corporate for Polymetals. Linden, welcome.
Thanks, Oriel.
Now, for investors who are new to the company, can you tell us a bit about Polymetals?
We're a production company. Our main project is in New South Wales in the Cobar Basin. We're operating a silver zinc mine here in New South Wales. We redeveloped this project in June of last year, so we're coming up on our 1 year anniversary of production. It's been a big job. Pulling projects together are not easy. It's not for the faint-hearted, and most people don't do it for good reasons. So at the moment, we're producing zinc concentrates, silver lead concentrates, and a high silver DSO product.
Now, at the same time, while you're producing those products, you're also drilling. You're also looking for more, and you've just had some new drilling results that in Endeavour, which are showing some very high grade silver, lead, and zinc. Can you tell us a little bit more about that?
Yeah, for sure. We've been drilling here at Endeavour in parallel to our redevelopment and production activities for the past 2 years. This mine, it was discovered in 1974. It was developed in 1982. Over the last 40 years up until 2020, they mined 32 million tonnes of ore. Traditionally high grade silver, lead, zinc. There is a gold and copper component to this ore body as well. But what we found since we've been producing and working at the mine over the last couple of years is that a lot of the data is inconsistent. We found a lot of areas within the mine which we haven't included in our resources and reserves. And we still have 16 million tonne of resources and we have 6.6 million tonnes of reserve. But we found a lot of high grade areas, particularly in the higher levels of the mine, which we haven't included. Required further drill testing and capital applied to it. We weren't in a position to do that until recently, once we've been producing free cash flow. We then set about drilling out this main ore body area. Now, there was a collapse that happened in the mine in 1996, and that was due to insufficient ground support. They were taking 100 by 50 by 100 metre stopes, massive stopes out, and they weren't backfilling. So it was poor mining practice that happened in the early to mid 90s. Now, we excluded all of that material, and it has been excluded over the last 3 decades. So we went into these various areas to investigate, and we realised that maybe this collapse zone is not as big as what they had portrayed, and that's really why the drilling was done. We're getting intercepts 45 to 20 metres in widths. These are still very large stopes, over 150 metres in vertical extent, 50 to 60 metres in lateral extent. And the same in the third dimension. So we've got significant volumes of mineralisation. And what's really good from this drilling is that you'll see in the results, it's very consistent. We're sitting around that 400 gram silver equivalent number across the board. So this is material that we can process through our mill. We are only operating at 30% of our nameplate capacity at the moment. We've always been wanting to fill the mill. And if we can fill that with material higher up in the sequence at this kind of grade, which is 3 or 4 times more than what we're mining today, it's significant. We're dealing with dirt that's worth $1,200 a tonne, and we're dealing in volumes which are very material to our mine plan.
And at the right time, when you talk about commodity prices, right?
Oh, I don't know about today. I've been slammed. Silver's down 6%. But look, we modelled this project on a $32 silver price. So we're a multiple of where we are today. We were $80 a couple of weeks ago, but it is what it is, and we can't control that. All we can control is our production and pulling more of this high grade in. If you can't make money from $1,200 dirt, then you shouldn't be in the business, and that's what this means. It means a larger production profile to the project. It means extended life to here at Endeavour, and this is only one of the areas that we've investigated. We've only just started drilling in mine, underground drilling, a couple of weeks ago. We've reported the results from the first 12 drill holes. 10 of those have intercepted near on ore. Well, it is ore, which we could bring into our mine plan very quickly. Now, the important thing about this is that these intercepts that we've hit are only 10 meters away from our existing development. So anyone that knows anything about underground mining, doesn't take long to develop another 10 meters to get into this ore. So it's very material. We'll see more results coming out over the next couple of months from our drilling. I think we're at drill hole as we sit today, number 24. We've only reported 12 of those in our recent announcements. So yeah, there's more to come, and hopefully we can get into this material and start mining it, within the next 12 months.
So, Lyndon, the fact that the ore is right next to your existing mine, as you just pointed out, is clearly advantageous on many levels, right? I mean, location is almost everything.
Oh, for sure. I mean, yeah, it's very rare to see intercepts like we put out today, whether you're exploring, developing, or producing. Now, the fact that we've got an approved mine, the fact that we've got a mill that's turning right now, and we're 10 meters away with our existing development means that we can monetize this, if we wanted to, within weeks. So it's not years of development and approvals. This is very high grade material, significant volumes. We're not talking 1 or 2 meter intercepts. We're talking 40 to 20 meter widths, which we can do very large stopes and pull material into the mine plan very quickly.
So, Lyndon, just before we let you go, you talked about the fact that you are still drilling, your drills are still turning, some of your results are still due to come. What does the timeline look like? So when are we likely to speak to you next and get a bit of an update on what you're finding?
Yeah, so we're pushing out samples weekly now, so you'll probably get another update in 2 to 3 weeks. And that's part of the current program. So at the moment we've budgeted 34 holes that will likely expand based on the results that we're getting. So we should have updates out there to the market similar. We don't know yet because we haven't got the assay results back, but what it's looking like is similar results over the next 3-week periods for the next couple of months. So it'll build the story, and people will understand the volume that we're dealing with. And like I said earlier, we can monetize this very quickly, and it doesn't take many tons at 1,200 Aussie per ton dirt to make money from this. And we've got ongoing production which we're making money from, generating good free cash at the moment, and we're really now trying to demonstrate what Endeavour is. One important thing is to step back. This project was out of the public arena in a private company for the last 2 decades. So people understand probably now what the Cobar Basin offers. People probably understand over the last 3 years what Polymetals has, but we're really yet to show the market what Endeavour is. It's a very high grade polymetallic deposit, silver rich, but also some good credits from zinc and lead as well. So we're excited. We're producing cash, we're producing free cash now, and these drill results really just show what we're up against or what's in front of us moving forward.
Excellent. Well, we really appreciate your time today, Lyndon. Thank you so much for sharing your update.
Thanks, Ariel.